Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Big story of the day, of course, Apple's earnings, but they're not the only stock to report. We're going to run through as many of the earnings from yesterday after the close and this morning as we can. Also going to talk about Google's reported expansion into China, and that's hurting BIDU this morning. We're going to, if we have time, run through some recent examples of gap fills on some charts that Joel was eyeing our guest today in the theme of Apple. Piper Jaffray's Mike Olson will join the show. He's going to join us at 8:35 to kind of give us his thoughts on that Apple quarter. But let's get to the broader market first. Joel, how are we doing this morning in the S&Ps?
Well, we're down 0.75 of a point. We had a nice pop off the Apple numbers. Your pre-market high is 25.5. That's right with Tuesday's high, so that's your target on the upside. On the downside, we had a quick sell-off on the tariffs. We hit 28.1075. Nothing major there. Yesterday's intraday low at 08.50. Crude sliding here, down 95 cents at 67.80. Gold just hanging out here, trying to find a bottom in the lower 1,200 handle, down at $1.90 at 1231.70. And silver down 9 cents at 1547. Bitcoin kind of slipping here. The Bitcoin futures are now at 75.75, down $135. I'm not sure if Dennis is going to be able to join us. I think his Fortnite tutor is coming over today to help him work on his Fortnite game. I hear a lot of parents are now hiring Fortnite tutors for their kids, but maybe Triple D can break away from his tutor. And
I'm trying to break away from my tutor, and my tutor is the market here too. I am in a fast market here, guys. I got a ton of positions on from last night. Head on a swivel here, obviously, because we've got, Apple last night. We got Google news here, major news, and then we had tariff news last night. So long some stocks, short some other stocks. Try to stay with you guys as long as I possibly can, but if I get too busy, I'm going to have to leave. So this is a live, right. That's one thing about our show is we trade. And we trade like crazy. And sometimes trading's got to take precedence over the show. Joel and Spencer will stay with you. I will try to stay on with you as long as I can. But if it gets too hectic here with my trading, I'm going to have to leave.
All right. Well, why don't we let Spencer take the lead then? And then Spencer, and then I'll comment. And if you can either say pass or make a comment.
All right. Then
this is an easy one for you, Spencer. If you don't start on the right stock this time, you're
fired.
Can we start with XL Group?
Yes. I hope that was a joke.
Okay. Apple reporting yesterday at 4:30 the Q3 EPS $2.34 versus $2.18 estimate. Revenue $53.3 billion versus $52.34 billion. So a beat on the EPS and the revenue for Apple. iPhone sales for the quarter coming in at 41.3 million versus 41.79 million. So slight miss on that number, but they also gave some guidance. Q4 sales guidance higher than the estimate. $59.6 billion was the estimate. 60 to 62 billion is what they said. Gross margins around 38%. That's also for the Q4 guidance. And the stock is popping.
Nothing bad you can say about this. Well, I guess a little bit on the actual iPhone sales. Not much I could say, except we're trading at the highs of the pre-market session here, just under $199. You got to think about that magical $200 level coming into play. Right at the highs of the session, 198.85. I thought 196 held up a little bit last night. That was a former all-time high. I'll look for that as support. Dennis, any comments on this monster report?
This is going to be on $1 trillion market cap watch here. What did we say, 203, 204?
Well,
what's the price?
It's a moving target, remember, because they're buying back stock. I think it's around 204 now.
Okay, so you're 5 points up. I don't think you're getting there today. I think you're going to challenge the 200. I mean, it continues to climb. This is not something that just spiked up here and all of a sudden gave it back. It spiked, it gave a little bit back, and then it's been on the continuous climb. You look at your chart from the pre-market and the after-hours action, saying it just keeps rolling up to new highs here. So Apple very hot here this morning. Obviously, I own this one in my invest portfolio, had it in there for a long time. It's a big chunk of the Qs. I didn't look last time. Last time I looked on the Qs, I think it's 16%, isn't it? Let's go check it out. Because it's a big chunk of the Qs. So, what that immediately means, when I look at this is that, if you've got Apple and you've got to have Google trading up too, which we're going to get to in a second, it's 11%. So sorry, it's 11% of the Qs. But if you just look at the Qs top components, the two basically are Apple at 11%, Amazon, Microsoft, and then you got Alphabet. But you have both stocks of Alphabet, so you have to add them up, and Alphabet's roughly 10%. So basically, top three components: Apple, Amazon, Alphabet. And you've got two of the three up substantially here this morning. We got Google up over 16 points here as well. So I would gather, you do the quick math, just taking the Apple, it's 4% times 11. It's a 0.4% gain on your Qs. Your Qs are only up here 0.12% here. So basically, just Apple will bring the Qs up. Just if it was just Apple and nothing else trading, the Qs would actually be trading higher than they are right now. So that means other stocks in the Qs are going to have to be down. So again, think about your non-tech stocks in the Qs. Think about, and a lot of other tech stocks that actually could potentially be down because the ARB has to add up. I mean, they all have to add up to where the Qs is. And if Qs are under what the Apple pricing is, that means that a lot of other stocks in your Qs are potentially going to be down.
All right, Todd. Yeah, first thing I said this morning, and you pointed out to me, kind of the China manufacturing and the China tariffs. I'm like, why aren't we up more? First instinct this morning. I just want to alert our traders we're coming up on mid-range on the session. I love to keep an eye on that. That coincides with your closing price of 17 even. Mid-range is 28.18. So there's your line of control there in the S&P futures, 28.18. Spencer, what's the next bang?
And Apple, we are just about at one. We just hit 199. We're back down below it now. So
I think we're going to test 200. So let's see what it does. Can it break through 200? It's going to be the big question here today. And then the other one moving here, I guess I took the lead on you, Spencer. What we were talking about already is Google.
Well, yeah, I was actually
up 15 points.
I was going to go to BIDU first because that relates to Google.
Yeah. Okay, do BIDU because there's lots of news on BIDU there. So we had earnings, but this is not just all earnings. This is something else too.
Right. So BIDU had earnings yesterday after the bell. Q2 EPS $3.18 versus a $2.61 estimate. Sales $3.93 versus $4.03 billion. So a big beat on the EPS, but a miss on the sales number. Q3 sales guidance was bad. They missed on that, and the adjusted sales guidance, it was bad. It was bad guidance, bad Q3 sales guidance. I butchered that one, but that's all I got to know. The Q3 sales guidance was bad. On top of that, there is this report this morning from The Intercept that Google is reportedly planning on launching a censored search engine in China. So BIDU has some weak guidance to contend with on top of this news of Google maybe jumping into their sandbox.
And BIDU was actually, believe it or not, trading up on this news last night. It was trading up for the majority of the after-hours session. They reported around after 6 o'clock. The last couple hours, BIDU was actually catching a bid. And then this news this morning, they're just hitting it. I mean, Google looks like they're going to be going head-to-head maybe with them here. And that's why you see BIDU getting hit and Google significantly higher here. So you can see just this morning, if you look at the chart that Joel and Spencer are showing there right now, you can see the leak. And if you look at Google and bring the chart up a bit, you probably see a coincidental rally in Google. Google's starting to give back a little bit of it, up 13 points here now. It was up as much as 20 I saw earlier. So Google is leaking here a little bit, but big moves here for both these stocks.
All right, first go with the BIDU here. Off the lows of the session, made a low at 226.25. We're $6 above that. That's taking out the former low of the move at 236.28. So now that will be your minor resistance. I'm not sure if we're going to get beyond that pre-market low, just another tick at 234. So may have to be buying here in an up tape as opposed to when it was getting plastered last night. Looking at Google here, I look at the GOOG and not the L. Pre-market high comes in at 1237. Yeah, after the report, you put in, the all-time high is way up here at 1273.89. So if we backed off the pre-market high, we will use that as a potential exit point on a long. That's at 1237. Your 12-day high is 1235.
Jump over here to the other stock here. Well, there's a lot of other stocks here, but where was I going here? I'm trying to trade and do the show at the same time. Help me out, guys. Help me out. You guys aren't trading actively.
I was going to take the
take it. I had my stock right in my head, and I started making two trades. And I was like, I forget what I was going to talk about.
Do you want to? Was it Sprint by chance? They were this morning.
It wasn't Sprint. But you can talk Sprint if you want.
It wasn't Sprint.
It wasn't Sprint.
No, I was probably going to jump over. I was looking at the earnings from last night there. I think I was going to Akamai, AKAM, because it's down 5%. I was trying to just look at what's getting hit the most off of the big earnings names, and AKAM, which got hit actually right into this report. You can see I actually fell from 80 to 75 2 days ago. Had a quiet little day yesterday, but then getting hit for another 4-point whoosh. Interesting setup here, though, in Akamai. Give us the numbers, Spencer, or Joel, talk those levels.
The EPS, 83 cents, is a 3-cent beat on the estimate. Sales was a miss, slight beat, $663 million versus $662 million. From the conference call, they gave some Q3 guidance. That was okay. Q3 EPS guidance coming in a little higher than the estimate. 80 to 86 cents was the range that they gave, and 80 cents was the estimate. Sales coming in a little light by about $10 to $20 million for Akamai.
And the stock is trading down, Joel.
Oh, my gosh. I didn't get the memo. Dennis, did you get the memo on this stock?
Well, you look at that, but let's consider one thing is that all NASDAQ got hit that day. So you can bring up, like 2 days ago, Adobe, they all got hit. So I don't think there's anything dirty there. Normally if the market hadn't moved, I would say, yes, somebody got the memo. That's not the case though, because if you look at all the tech stocks from 2 days ago, we know we had a tech wreck. We had a quiet day yesterday with it, but we had a tech wreck 2 days ago. So it's not surprising that the stock was down significantly.
I'll just say that you had a former low of the move when was that? That was the end of June 28th. You hit 71.02, and you hit, 69.85 in the pre-market. So just because of what the stock has done over the last three sessions, I'd have to be a little bit more of a buyer than a seller here between 70 and 71. You are getting a green bar here, the first green bar, since it opened at 4 a.m. this morning. So I'm not shorting this one in the hole. That might be the right thing to do, but just the low of the move and now trying to recover. Anybody that shorted this in the 80 handle, you had an old last week to do it. Coming in the lower 70 handle, I don't think you're going to get a much better opportunity to cover a short in this than the downside. Also, always keep an eye on the opening print.
Jump over to Tesla here because there's multiple headlines for this stock as well. The big headline, they're building some factory. Is it so official now? Because this was rumored before. Do we have an official, like they're going to build this $5 billion factory, or what's the deal with Tesla?
Yeah, I think that's official. Also saw that. Oh, no, that was something unrelated to his Twitter. But yeah, the factory, they're adding workers and they're building a new factory. So it's official.
And the stock is trading up slightly on that news here. We do have earnings here tonight. So whatever it does here today is going to be pretty much non-comparable to what it's going to do here after the bell, after it reports. The trend is not your friend, at least the recent trend. It's been down, but we know the honey badger stock that it is. It seems like they disappoint. So if they say anything good, it probably rallies. But it'll be interesting to see how they react to this Tesla report because the sentiment towards it is not as great as it was just a couple months ago.
Just looking, 300 is a big swing number here. It's in April. It spent, maybe 6-7 sessions before below 300 before it took off. It did the same in May, but man, it's having problems here recovering. Of course, the report. What we're going to be looking at the report is the cash burn. Gene Munster a few weeks ago on the show talked about they would be having to raise money. I think he maybe said in 2019 or 2020. If that cash burn is accelerated, they may need to step that up. But I'm not really sure what the numbers are going to indicate. But it's just like if they're going to be a real car company, then they got to start producing real cars or a real amount of cars. They haven't been able to do that. And I also think Mr. Munster's also leaning a little bit bearish into this report.
You know that's what's interesting too is Gene has been a bull here for Tesla. He's been on our show multiple times, but last couple times I saw him on CNBC, he's talking more cautious on Tesla. So that I find very interesting here because he's kind of changed his tune just slightly there. So I don't know if it's all these tweets that Musk has been doing or what the catalyst here is to make Gene a little more nervous about his bullish stance on Tesla, but he doesn't sound as confident and the bullish side as he once did.
Yeah, so we'll see. I mean, do you look at their reports? They lose like $2.50.
Oh, it burned so much money. But you know what? The market just loves the stock. So it's all sentiment. I mean, they've loved it forever and they've ignored it forever. It makes absolutely zero sense to me. I mean, I've been, there's two things I've pretty much, not been a fan of here on this show for the last couple of years. One is Bitcoin. The other is Tesla. I've dogged Tesla for a long time. And I've been on the wrong side of both of those trades. I mean, I was on the right side for Bitcoin here in the last little while, but I didn't like it at 2,000. I like it at 10,000. I like it at 20,000. It's back to whatever it is, 7,000. I still don't like it. Tesla, I didn't like at 200. I didn't like at 300. Now it's, it almost got to 400. Now it's come back off to 298. So I'm not going to say I was right. I've been wrong pretty much the whole time. Just, I've been right lately on it. But, I'm a value guy. And there's no, when you're looking at something like this, it's hard to really come in here and say, oh, this is, a value type of stock. It's just not my type of stock. So what's Jason saying, though? Because Jason's been right on Tesla the whole time. Is he still, because he was getting a little bit wishy-washy on the bull side there, too. Is he still, on the bull train here? Or is he getting nervous there on Tesla as well?
He actually was at the Tesla factory late last week, and I think,
Jason was.
I think he's a little upset that they didn't give him a tour and tell him all their deepest, darkest secrets. So,
so he's mad at him
because he tried, but they wouldn't tell him anything because they're so secretive. But I want to say,
I guess that's a good thing.
I guess. Going back to Gene though, Dennis, are you buying Gene Munster's new ETF?
I didn't even know that. Has he launched a new ETF?
Well, his firm LOUP is the symbol. It's with Innovator. It's
when does that actually come out?
Yeah, it didn't come out yet.
Yes, it did. Yes, it did.
Oh, it did. It's traded for 4 days.
Anyway,
wow, I didn't know that. So he's got an ETF.
Everyone, I'm gonna get an ETF one day soon. You watch. All right.
I needed the ETF. I always wanted.
Me too.
You know what? I'm gonna have my ETF is when 3D Systems is out of business or changes their ticker symbol, because I want their ticker symbol. It's triple D, DDD. So that's when I'll launch my ETF, when I can get that DDD's ticker symbol back. So I hope 3D Systems goes out of business or they change their ticker symbol, because I want their ticker symbol.
All right, let's move on to SodaStream. Give me an all-time high in that, because this one is ripping this morning.
Wow.
Q2,
holy cow. Everybody's drinking pop?
Q2 EPS, a buck.
Sugary pop?
Yeah, I guess. $1.14 versus 73-cent estimate. Sales 171 versus $149 million. They are also raising their guidance for the fiscal year. They're seeing sales growth of from 15% to 23%. They're raising that. Just good news across the board.
That's a big move here for SODA. Here's another stock. I don't totally get this one either. And sometimes you just can't wrap your head. How much money do they make? They make some good money.
What they make? $1.14. Yeah.
Well, they make that was just for the quarter.
Yeah,
well, they make some money. So I guess you can't argue it. Man, was this a buyback in 2016 when this got down to $13? I don't know. Obviously, they figured it all out, but I was never a real fan of people making their own pot. Is it just that they make their own pot? What else are they doing? Are they doing other stuff there?
Do something else.
I mean, it's a big machine that sits on your counter. My buddy's got one. It takes up half his counter, and he makes his own soda pop. It kind of sounds silly to me, considering how cheap soda pop is. But, I mean, I can't argue with the stock price. It's moving.
I don't know what else they do.
Maybe that is all they do. Does anybody else, chat, help us out? Soda got some other stuff that we're missing there. But, like I said, I had my buddy. He's got it on his counter. He made me one of those soda pops once. I think it was a root beer. He put twice as much sugar in it as normal. He's like, God, taste
you're
this.
Not supposed
it's so sweet. And my cheeks almost blew up. There was so much sugar in the thing.
You're not supposed to, I think. I think it's like a healthier alternative to soda.
Yeah, you're supposed to put less sugar. And he put twice as much sugar.
I've heard that story so many times. I'll just give you a pre-market high of 109.68. We backed off $3. There's no way I would buy this with Dennis's money up here. If I was long, I would say, oh, come and get me at 109.58. 110's a whole number. If not, it starts to leak, explode. Just a lot of air underneath this one. So just keep it on. The only number I can give you is the pre-market high of 109.68. You might want to check the short. Is this a heavily shorted stock? Because I don't know if that's behind this rally or not, but shorts are just getting killed here. 109.
I mean, they make some money, though. This isn't just like a pure, like, what the hell is it doing? It's burning cash going up Tesla story. I mean, you just said they made $1.14 last quarter. You do the quick math on that. It's $255 a year. I mean, trading with a multiple of 20. If that's sustainable, it's not that crazy. And if it's growing, it's not that crazy, too. I don't really understand, like, why everybody's buying this product, but whatever they're doing.
Well, this is what Jack Daniels says. He says pop is cheap, but returning the bottles is very, very annoying. So, you don't have to return the bottles with that, I guess, if one theory. I mean, I thought people were moving away from soda and carbonated drinks and drinking more healthy stuff. So never been in this one, don't understand it, and definitely will not be trading it from the long side today.
Not for me and Joel. It might be for other people, but it sounds like it's not for me and Joel.
No. Oliver Closeoff says the short interest is only 2%.
So. Did you get that name? Oh, is that the name? What chat is he in?
Oliver? Oliver's in the Google chat.
Did you catch that?
No.
Handle? He just read it and he didn't even catch it.
Moving on.
Okay, anyways. That's one of the best handles I've seen.
All right.
Props, Oliver. That's a good one.
All right. Pandora is also.
Oh, no, that's his real name.
Okay. I'm sure. Yeah. Okay.
For sure.
Pandora. You guys want to go there? Since they're also ripping this morning?
Yeah, let's go to Pandora. Pandora's hot here. It's up 86 cents in the pre-market, up 12%. I don't know. Like, it's funny. This market, this is a tricky market. I mean, you got some stocks ripping, some stocks dipping, and you got some stocks just completely flat with the market here. So this could be a tricky one here today. But Pandora catching a bid. I mean, you get up near $8. I think there's sellers all over the place. So I'm probably a fader of the rally just because it's Pandora and just because it's an ugly couple of candles. But you're getting some of those losses back from the last couple of days.
Well, they had earnings yesterday. They beat by a penny, 15-cent loss versus a 16-cent loss estimate. Sales $384 versus $372 million. They gave guidance on the conference call. Q3 sales guidance higher, mostly higher than the estimate of $394 million. The range they gave was $390 to $405.
Wowzers. So anyway, stock trading up. Joel, technical thoughts here.
Wow.
I think
leaning the wrong way into the report was Wall Street here as it closed on the low of its session yesterday. Pre-market high, you had a couple pokes at $8, turned back at $7.89 so far, 20 cents off of that. I mean, you could use that pre-market high, or you could use the high at 8.11 on July 27th, and then there's just a whole host of highs at 8.25, 8.30, 8.35. So a lot of resistance in here. Important to hold the gains. Yesterday's high 7.58. Yesterday's high 7 even. So big gap to fill in here, but that looks like it's already starting to leak here a little bit. James in the Google chat, big stock from yesterday, GDS, man. I think someone came out with a short report on it, Spencer. I'm trying to pull up the news here. It did catch an upgrade today. Circulation of negative commentary from Blue Orca Capital set sell recommendation and a $0 price target. Zero.
A $0 price target. Nice. I'm not following the story at all, but I haven't seen a lot of analysts give $0 price targets. So I guess props to the analysts for getting that bearish. I don't know who's the analyst? Blue
Orca Capital.
I don't know if they're, one of these a little Citron or what they are, but I don't know anything about Blue Orca Capital. But $0 price target obviously spooked the market yesterday.
There are so many. Oh, sorry, Joe. Go ahead.
I was just going to say, simple technical, 1859. That was the low from yesterday. You have bounced up off of that with the upgrade from Credit Suisse defending the stock. Two levels, 2183. That's the close to see if you can. That will be defended. And then right now, Dennis, what's the bid offer here? Because this thing is just hugging $23. Is there
23 to 23.15. It's trying to hold 23.
Yeah, what is it? Is it a big? Is it a couple icebergs on both sides?
Could be. I saw 5,000 shares just trade there a few minutes ago. It's still got some size there, so it might be an iceberg bid of 23. I haven't been watching it to see if it's an iceberg bid. The only way to really detect, I guess, unless you got software that's going to show you your bid offer and then look at, what the time and quotes is doing with the trades. But, when I bring it up, I just kind of look at it manually, and I see a 1,000 share bid there plus another 100 shares on NSDQ. So I see 1,100 shares there, but I just saw a 4,900 share print there. So I'm not sure if it was counting them down or if it actually is, solid there. So might be an iceberg bid there.
Okay. Like I said, the close from yesterday, 2183. 1859 was your low from yesterday. Spencer, pick us back up on the earnings.
I was just going to say, whenever you see headlines like this of short thesis or being passed around, Andrew Left, as great as he is, definitely popularized and made mainstream the practice of publicizing your shorts and blasting them out to the media and getting them out as much as possible. And there are a ton of people, smaller firms that do the same strategy. We get inundated with them several times a week. We get people who trying to get us to promote their short thesis.
These are not as pump and dumps or dump.
I'm not saying that's what this is. I'm just saying whenever you see a short report, just do some due diligence on, if you can, on who's doing it, because whether it's Blue Orca Capital or Citron Research, just try to understand first if they have a track record. If they have a track record, that's all it is.
And if they have an agenda. I mean, there's a lot of, and there's a lot of manipulation that tries to happen out there.
Yeah.
I mean, Citron's well respected because they do some damn good research, but, still at the same time, I mean, they are talking their book like crazy. So, and, it's like I said, it's, kind of a license to print money. They short the stock, talk bad about it. They know it's probably going to fall 5 or 10%, depending on what the stock is. So, you can't argue with his influence. It's legal. It's sometimes dirty, I think, some of the stuff that they do. But, that being said, it's legal, and, they're doing it that way. And there's a lot of other people trying to participate. Some of these other smaller firms might be doing scams, though. So be careful. It's not just a complete scam.
And we get people, every so often who will say, like, they'll email us and they'll say, we are, a new firm. We're modeled after Citron Research. Well, okay, now I know your playbook. But now I get
you talk your book.
Now I get what you're trying to do. But all right, let's move on.
Manipulate the stock. You're basically trying to, in a certain extent, to manipulate the price,
right?
And trying to do it in a legal way, which is still, I think the whole thing is dirty.
Now,
but anyways, that's for a conversation for another day.
In this case, and it's mentioned in the chat, is this report was on Bloomberg, and it's the guy went to the factory. Apparently, they're saying so. I don't read the report, can't say, but just do some DD whenever you see
for sure
a report like that. You want to go to Cake, mentioned in the chat, Cheesecake Factory.
Killed.
I think National Cheesecake Day was this Monday or tomorrow, some day this week, and apparently no one is eating cheesecake anymore because Q2 EPS for Cheesecake Factory 61 cents versus an 81 cent estimate.
Yikes.
Sales 593 million, missed by $1 million. The Q2 EPS, I'm sorry, they did not give guidance that I'm seeing, but just a huge miss on the Q2 EPS there.
We saw this yesterday with Texas Roadhouse, TXRH. It was first one, of the major restaurants getting hit hard. It bounced back a long way. So we do have precedence here for Cake. Just 50, big psychological level. TXRH bounced yesterday. It's not out of the realm of possibility that this could bounce there too.
Also, you have a 49.64 low from May to lean on here. But there's another, when you see charts like this in the pre-market, and the low is actually 50.11 and you're hanging out at 50.40, one of two things is going to happen. That buyer at 50 to 50.10 is going to step up and drive this thing higher. But to me, the way the stock's looking is you might get one of these whooshes. You open at 50, you slam it down to 48, and then you come back up through that open. So $50, 49.64, that was your low from only 3 months ago.
Some interesting imbalances here. I'll just quickly go through them. Square 60,000 to buy. They're going to report after the bell, so we'll do a technical on it in a second there. I've got AT&T 126,000 to sell, Verizon 88,000 to sell. So a little selling of some defensive names here this morning. Kroger 93,000 to buy. That's going in the opposite direction. Just a big number for Kroger at this time of day. Pfizer 252,000 to sell. Pfizer ran into the wall of 40 yesterday. Got there on the kisser. I did played a little bit from the short side there. Small position left, but I've covered most of them. But just saying, it blew through 39. The next low was 40, so I took some home overnight thinking, well, in worst case scenario, I'll probably be able to cover 40, and it's pulling in here this morning, so I've covered most of them now.
Hey, can I interrupt for a second? I think we have some news out of the Treasury, some more qualitative easing. They said they're going to increase monthly auctions.
Quantitative easing?
Is that not what I said?
Well,
it's really good
qualitative,
easing.
but it could be qualitative as well.
It's really good easing.
Okay.
It's high quality.
It's quality. High quality. I like
QE. Oh my God. QE.
I like qualitative
QL.
better than
QL.
quantitative.
I thought that's what I said. I guess. All right. Treasury will increase.
QE again?
Listen, I didn't even get the headline yet. Treasury will increase monthly auctions for 2-year, 3-year, and 5-year notes by $1 billion a month. They're going to increase the 7, 10, and 30-year auctions by $1 billion a quarter. That's out of Dow Jones. So some QE this morning.
Oh, that's interesting. So S&Ps are unresponsive to it, so maybe it's just a small amount compared to what it used to be here. But you can see S&P is not really moving off it. But so nothing to say. If the S&P is popping, I'd say whoa, but I'm not seeing much of a response here.
They hit the TLT on it. So, but that doesn't make any sense. I don't know. We got the Fed coming out later on today.
TLT is getting beat here. You're right, Joel. I just TLT is down significantly.
I know we're jumping around here. We got a guest coming up here at 8:35, Mike Olson for Piper Jaffray. But someone popped in about AMD here, Dennis, and I kind of like the setup here. You had the bump after earnings. You cleared out $20. You cleared out those big sellers at 20. You went to 2018. Had a weak close that day and then a bad day yesterday. I know we're trading up 15 cents, but to me, it's all about the double bottom, 1827, 1831. I'm going to keep this right here on my front screen. If, in fact, it takes that out, boom, I think you got some downside on this one. But so far, holding a majority of the gains from earnings here, but you got a double bottom to keep an eye on here in AMD.
I said it 2 days ago on the show. I think the top is in. I was slightly wrong because I said it before it made the 20 top. So when it was 1988, it went up to 2018. So it went up there, took out anybody who was leaning on 20 on the short side and suckered in a few longs. I often see that they'll peek their head above a big psychological level and then come right back in. So classic top formation here. Not saying, it's going to be for sure, but, it looks to me like there's a top in here. Jim Cramer was really pumping it there 2 days ago there too when it was $20. So I don't know, take that with what you will, but I think he's wrong on this one. And stock, and obviously the market thinks he's wrong too because it's already down $1.50. I'm going to stick with it. I think top is in an AMD. I think some rallies are to be sold.
Let's cover Generac here. We're getting a question here from DC1, trading up $1.75. Sold a lot of generators, Spencer. You got the report in front of you?
I don't.
Generac, GNRC.
I don't, but I can pull it up real fast. I didn't see it this morning. There we go. Q2 EPS $1.11 versus a 90-cent estimate. Sales of 495, or just under that number, versus a 444 estimate. So a huge beat on the sales and a beat on the EPS for the Q2. Fiscal year sales growth, they raised it from 6 to 8% to 13 to 14%.
It's up on 15,000 shares here. So not
light volume.
Light volume.
But bid. And that's the difference.
Good point.
So you can say light volume, but when it's bid up there, nobody's hitting it. That's telling you it might want to go higher here. So it is a breakout here for GNRC. You are coming into hurricane season here too. So it's interesting. We often see, this stock have a lot more life there in hurricane season. Now, we haven't had any major hurricanes yet, but we know if, there's some that, come up, the stock is one that catches a significant bid. So I hate being short just from the season. I hate being short GNRC this time of year.
Pre-market high, you just hit a couple brackets ago at 55.85, less than 1,000 shares traded on that one. If you're super bullish and you don't want to sell at 55.85, maybe take a look at 58.04. That was your May of 2014 high. The stock big run. Now, it was just $50 back on July 17th. Spencer, you want to take a quick break here and bring on our guest and do some analyzation here of the Apple report.
Analyzation of Apple. That's what we're going to do with Mike Olson, Managing Director and Senior Analyst at Piper Jaffray. So we'll be back in a moment with Mike. All right, welcome back, everyone. As promised, we are here with Mike Olson, Managing Director, Senior Research Analyst at Piper Jaffray. Mike, how's it going today?
It's going well. Good morning. Thanks for having me.
Busy day for you here, Mike. Before we get into the Apple report and some of these other issues that you cover, could you just talk a little bit about like how you became a Wall Street analyst? I mean, were you always interested in the markets? Because you know, when I went to college, I mean, look at some of the business school classes. There was nothing like how to be a Wall Street analyst. Just real quick, how did you grow into this role as the managing director and senior research analyst at Piper Jaffray?
That's a good question. It was definitely not a direct path. It was a path that included a little bit of friction in getting here, and essentially, I was planning to be a dentist, to be honest. That was my game plan, is I was going to be working in people's mouths for years and years and years. But as I went through the kind of prerequisites for that program, I got into a few classes like organic chemistry and a few other terrible classes. For those that have taken organic chemistry, you know what I'm talking about. And they call them weeder courses. They weed you out, and those weeded me out. I realized I just wasn't interested in that, and started to take some business school courses, and it was just like flipping a switch. It was really intuitive. And anyway, ended up doing an internship here at Piper during the midst of the kind of internet tech craze, and right in the summer of 2000, and just loved it and haven't looked back since.
Oh, okay, great. So you're not pulling teeth, but you definitely have a job that requires a lot of discipline, a lot of hard work. So let's get into the Apple report. The street absolutely loves it. Give me your current price target here. Are you thinking of raising it? And let's start out with those two questions.
Yep, we actually just raised it, so it's $218 is our new Apple price target. And, we feel very good about Apple and how things turned out for the quarter. The key takeaway on Apple is they beat on both the iPhone and services revenue, which are obviously the main areas of focus for investors. And I would say the other major item is that they guided September quarter revenue above consensus. The iPhone revenue beat was really primarily due to higher average selling price, or ASP, which shows us that the iPhone 10 is actually selling better than many people had feared. And actually management said on the call that iPhone 10 was the best-selling iPhone again this quarter. If you look at the better September quarter guidance, that tells us that the company is optimistic about the upcoming pipeline of next-gen iPhones, and that they're confident in the timing as well. So we should see this year a September quarter launch, whereas last year we saw a staggered launch somewhat into the December quarter. And just as a reminder, we expect an update to iPhone 10 to include, 2 additional options. So in addition to just the upgraded iPhone 10, which who knows what they'll call it, but let's say it's the iPhone 10s, the 2 additional options would be a lower priced iPhone 10, which we call the iPhone 10 Lite, and then a larger screen plus version, which maybe will be the 10s Plus or something like that. So with a wider array of next gen iPhones coming, we do think that'll help with upgrades for next year, and we're modeling for more units sold of iPhone than what consensus currently is by about 3 or 4 million units.
How do you come up with that price target? Do you go over to your technical analyst and Craig Johnson and say, hey, could you do some projections here? Or do you strictly take the numbers and crunch the numbers and come up with that price target?
Yeah, it's there can be different ways of doing it for different companies. In this case, it's pretty simple because we just use a kind of typical PE ratio on 2019 earnings, and that multiple that we employ in this case is essentially in line, slightly above actually our expected multi-year EPS growth rate. So that's a pretty common way that analysts or others will create a price target, is to essentially use a multiple that is a slight premium to the multi-year expected growth rate of earnings over the next several years. So that's what we're doing in this case. We're using a 16 times multiple, and we expect kind of mid-teens EPS growth over the next couple of years.
Anything in the report that left you scratching your head, or it was like, oh man, they missed on that, I'm a little bit worried? Any negative? I mean, here we are, a lot of positives here. The street's reacting, up nearly $8. Anything in the report that you were disappointed
in? No, to be honest, and that can be somewhat scary when everything lines up just perfectly. But I think for the most part, things were very strong. They did miss our iPhone units for the quarter, but it was essentially in line with consensus, and ASP was strong enough that that mix. If we have higher ASP and it drives higher revenue, even on a slight miss for units, that's certainly okay in my book, and obviously is okay with the market given what the stock's doing. So nothing major.
Mike, I was listening in and out to the conference call last night. My colleagues were listening to the entire thing. How valuable are those conference calls to you? Because it seemed like to me, obviously they're typically very dry affairs, but they can be helpful. In varying ways. Do you get value out of those? It seemed like last night it was pretty just kind of formulaic.
Yeah, they do a good job of not saying much after talking a lot, but not saying much. Which I understand. They don't want to give away much from a pipeline perspective, and you'll essentially never get them to say anything about future products. There are some little nuances or tidbits that you can pick up from time to time. So, for example, someone asked last night about iPhone ASP going into the September quarter, and the CFO reminded investors that the ASP is typically expected to be down for the September quarter, and they would expect that to be the case. And I think what that kind of potentially could confirm, if you wanted to really try to read something into it, is that, as I just mentioned, they'll have this iPhone 10 Lite version, which will be a lower ASP version of the 10. If they were expecting higher ASP iPhones and no kind of dumbed down version of the iPhone 10, then you could see a situation where ASP actually isn't down. So it's a lot of tea leaves and reading into it, and we're probably stretching even making that assumption. But those are the kinds of things you have to do based on the little amount of information they give us.
ASP, of course, average selling price. Now, you cover a lot of stocks. Are there other companies that where you find you get more value out of their calls, or some exec teams are more forthcoming?
Yes, but it's typically going to be not the kind of large FANG stocks or the mega cap internet type names. They're usually going to be a lot less forthcoming with kind of new information or future products or anything. But like one example would be on the video game stocks. We tend to get a pretty good sense from like Activision and Electronic Arts, for example, on what future games are coming and their expectations related to those games. So we do. It depends on the company.
Question from our chat now. What is the incentive for people to actually go and upgrade their phones? If you have one of the later models, they already have great cameras, they run all your apps. Where's the incentive for people to go on and get new phones?
Yeah, that's been an issue over the last few years as we've seen kind of this elongation of the upgrade cycle, in the sense that we used to assume that most customers would just upgrade every 2 years, and in the old days you'd kind of get an email from your provider, and they would say, hey, your 2 years are up and you're eligible for an upgrade, and you would just go and do it. And that has really elongated now to probably more like 3 years. So it's not necessarily a super positive trend, because you'd like to see people upgrading more regularly to drive more units. But at the same time, there's still a huge pool of potential upgraders. If we look at the number of users, active users of iPhones that are more than 3 years old, which would now kind of be the main pool of people that we would assume are ready to upgrade, that pool of users is around 250 million this year. So considering we're modeling for Apple to sell about 220 million iPhones, we only need actually just a large portion, but a portion of the existing users who have an iPhone that's 3 years old or older to upgrade. So it has become longer, but eventually after 3 years, things happen. It might break, or it might slow down, or the battery starts to die, or whatever the case may be. The other thing I would point to is that now with the next gen iPhone form factor, the 10 style form factor that has the full edge-to-edge display, at some point it's just not going to be cool anymore to have a home button on your iPhone, and that change in form factor can cause people to upgrade as well.
Mike Olson, Managing Director and Senior Research Analyst at Piper Jaffray. I guess the million, or should I say billion-dollar question here is, what are they going to do with all that cash? I mean, everyone's looking for a new product. I don't know if it was 1 or 2, 3 quarters ago, they were talking about getting more into health. Is that going to be something like Apple TV that just goes by the wayside? I mean, do you see any kind of acquisitions, or, are they going to do a special dividend? What are they going to do with all that cash?
Well, I mean, they repurchased 20 billion of stock in the quarter, and continued to pay a pretty decent dividend. So their initiative to kind of push the balance sheet to a cash neutral position in the coming years is kind of well underway. With the cash they're generating, though, in order to actually get to a cash neutral position within the next several years, they'd have to buy back more stock than what we have built into our estimates. So we'll have to see how that plays out and over what time frame they work to get to a cash neutral position. I don't think there's a big acquisition coming or anything like that. If anything, we would expect kind of their typical technology tuck-in type deals where they're adding, bits and pieces here and there. And it could be in things like you mentioned, it could be healthcare, it could be education, or machine learning, or augmented reality. Those would all be categories that would make sense for them to kind of round out with various tuck-in acquisitions here and there. So that would be our expectation, plus just a continued aggressive share repurchase plan.
All right, we've been on the line on this. Joel, you had something else?
I noticed in your coverage here that you covered Facebook, did the face plan here after earnings. You have a low here, 166.56, back to where it was really before the Cambridge Analytics. Just wondered if you could share your thoughts on Facebook after their last earnings report.
Yeah, for Facebook, we understand the concerns around more difficulty that the company could have related to accessing information that can be helpful in targeting advertising for customers, and that this could be a bit of an uphill climb for the company. But we also think some of the issues that the company is dealing with are short-term and in some cases self-inflicted for the benefit of future growth. For example, Facebook trying to shift more users to Facebook stories from the traditional news feed. It hurts monetization near term, but it's probably the right long-term move, as stories users are seeming to be more highly engaged users, and they'll push the monetization on that in the future with more ads at some point in stories. So there's some negatives certainly with what's going on, and the inability to, as I mentioned earlier, access some of the information that allows them to target users. But also some of this, as I said, is just them trying to set themselves up for a better position for future growth. And we think they'll get there, and it's just a kind of a painful period right now.
Mike Olson, Piper Jaffray, thanks for the time today.
Thank you.
All right, 8:50 now. We got about 10 minutes left. I wanted to ask that conference call question just because it was something that we were talking about yesterday. On the news desk. It's just they get so formulaic, and it doesn't seem like they actually answer any questions that they're asked. So it was good to see that he agrees with me, I guess, or agrees with that sentiment. But anyway, 8:51.
Well, they're not like Elon Musk though.
Which I guess we'll find out. I guess
where it says bonehead question. We don't like questions on data, boring questions. We want exciting.
We'll find out today if that's a trend or a blip. All right, let's go back to what else was on the list. Was there anything? Oh, Campbell's. We didn't discuss that. Was there anything you guys wanted to hit on? We got 9 minutes left on the show.
Let's jump over here just to the ratings because there's some interesting ones. Dropbox been a 3-day fall. I actually came on the show 3 days ago and it was $30. Got this one right because I said I think this thing, it's at support, but I think it's been here too long and I think it's going to break down. And literally for the last 2 days, it has just been annihilated. It is getting upgraded here this morning at Jaffray's. Stay bearish though. I'm going to fade Jaffray's on this upgrade here. I think you get a little life, maybe a little bounce, but you can anywhere, in the 28 handle, even the 29 handle. I think you're going to have a ton of sellers. Joel,
new all-time low here for Dropbox. I mean, how the heck did this get to 43.50? Boy, it's up 97 cents here, 27.74, 28.30. Take it through yesterday's high of 28.30, and it has a little bit more to run to the 30 handle. But man, there's a lot of people stuck in this one. I'll have to go with Dennis's opinion. I would at least like to see like a double bottom or a triple bottom or something to lean on here. Trading up in the pre-market, but not even above yesterday's high of 28.30.
Jaffray's. I want to say on Jaffray's, they also upgraded Papa John's this morning.
Whoa!
Upgraded from hold to buy. I like it. I love the call. They've had a hold on this thing for like 3 years, I think. But nope, not anymore.
I'm with you, Spencer. I love the contrarian calls, and we don't see them enough. It seems like 90% of the analysts just go with the flow. Stocks going up, they upgrade it. Stocks going down, they downgrade it. Here's a pure contrarian call. Stocks been going straight down, and they upgraded here this morning. So I love this call as well. I'm not sure I'm a buyer of the stock, but I like that they're hanging it out there. 40.65 is where it got down to yesterday. It's a big pop. You have a lot of overhead supply. People have just been punished on this, so I don't think this is going to be one that comes right back. I think you get up near 45, you find resistance. So even though I love the call, I think I'm still fading their call.
Just kind of trying to walk it up here. Not a lot of volume, as Dennis mentioned. A lot of overhead supply here. Couple numbers, just look at your data. This is what I look at when these situations come up. Okay, we're above yesterday's high, so you got a gap to fill down to 42.53. 2-day high 43.98, 44.63, 44, 46, 46, 45, 46. Just look at your daily levels, see if they want to blast through there, and if shorts, want to eventually cover too. So take a look at that. Trying to pick a bottom here. I don't think. Have you ever had a Papa John's pizza, Dennis? I don't know.
Yeah. Like there used to be one that was, and I don't know if they got rid of them all in Canada or not, but there was one actually just 5 minutes from me back in Windsor. And I used to go there every Friday night. I liked their pizza. It only lasted about a year, though, and they closed down. So I guess other people didn't. Sometimes successful U.S. businesses have struggles when they come into Canada. I don't know why that is. Maybe it's different suppliers. Maybe it's not known. I mean, the opposite is true, too. Tim Hortons has tried, going into Michigan, tried going to the U.S. multiple times without success. And I mean, there's Tim Hortons on every corner in Canada. So some things just work in Canada. Some things just work in the U.S. And this is one that just didn't work in Canada. So I'm not sure if they have any operations left in Canada or not. But I know they've struggled in Canada. I like the pizza, though. I've had it multiple times. I think it's pretty good pizza. And obviously when you compare it to Domino's stock price here, I mean, this one's a lot cheaper from a relative valuation, and it's just, underperformed. So I can't bring myself to just jump in here, right now because it's going straight down. But let's say I'll put it on the radar for, looking at the valuation and analyzing a little bit further.
Okay, S&P futures, they've jumped up above mid-range here, 28.18. Yeah, I thought that, I'm looking at Apple up 4%, biggest component in the S&P. I can't believe they slammed it down to 28.1075 last night, but you're working your way up.
It's the tariffs, and we didn't really talk that much about it. They mentioned tariffs again. Spencer, do you have the headline? I could butcher it out of my head if you don't have it in front of you.
Yeah, they're ready to increase proposed tariffs on $200 billion worth of Chinese goods.
Yeah, so trade war still on. And on that headline, S&P fell 10 points.
I don't know.
So we were trading up on the Apple news, and literally that headline broke from Bloomberg, and we dropped 10 handles in a matter of minutes. So we have come back from those lows, and we're trading slightly in the green. A lot of catalysts trying to bring us higher. So you kind of got a battle between the bulls and the bears here today. You obviously got stocks like Apple, Google trying to bring up the tech stocks, trying to move us higher here. And then you've also got stocks, and just looking over here, like some of your trade war stocks that are significantly down. Caterpillar, which I do have a short position on, is trading slightly down here in the pre-market. It's down 0.54%. Boeing, trade war stock, down 0.77%. Deere, I have a cat deer hedge going right now, so I'm long deer, short cat. So I'm actually net neutral. But it's trading down 0.58%, so the pair is working well because it's trading down the exact same thing. Those are your trade war stocks. So those stocks are weak here this morning. Also look at, your DIA is a little bit lagging because they got some of those stocks in there as well, the Boeings and the Caterpillars. But it's interesting here. I can't really bring myself to, I can't make some. This is a really tough day, like I was saying it before, because you've got, factors pulling us up, factors pulling us down. So it's going to be tough to figure out who's going to win here. Big battle between the bulls and the bears. People who like the Apple reports, maybe buying some tech stocks. Then you got people who are nervous about the trade war here still. So they're selling some other stocks. So you got some stocks up, some stocks down. You got the TLT assassinated here. It's trading down $1. So probably banks are going to be strong. And automatically that makes you think stocks like the utilities, the REITs, the defensive stocks are probably going to be weak. So, those are themes that are probably easier to call here today. But, you've got the Qs trading up only 0.16% and Apple's trading up 4%. That means other stocks in the Qs are going to be down because you've got, it's all got to add up. And Apple itself, if Apple's 11% and Apple's up, you can just do quick math in your head. Let's just round it to 10. You could say it's roughly 0.4%, 0.42% is what the Qs should be up just to account for Apple. Well, the Qs aren't up that much. So that means some of these stocks in the Qs are going to be down to make up for it. And you've also got a stock like Google, which is a big component trading higher here too. So it's not helping the cause. There's a few other ones in there. I believe GNRC is in there. It's up 3%. Now it's a smaller component. But there's going to be some stocks in the Qs that got to trade red if the Qs are going to open here. So it's going to be a wishy-washy day. Some stocks up, some stocks down. Careful with your trading, because just because the market's higher doesn't mean every stock's going higher.
Real quick, let's do the Haynes Brands report for Jazz here. Getting killed here. Spencer, you want to give us a report?
Sure. HBI reporting this morning the Q2 EPS 45 cents, missed by a penny. Sales 1.7 billion is in line with the estimate. The Q3 sales guidance that they gave was in line. The EPS guidance that they gave was in line. They also said that a contract of theirs at Target was not or will not be renewed.
I will just say it's getting killed, not far off the lows of the pre-market session, 1860. But if you look at your dailies here, you got 12 lows in the lower 18 handle. So if I was short this thing, I'd have my bids out there at 1830, 1820, 1810, 1805. See if I can get it a whoosh off the open. The longer it takes to get to that level, you may have to be buying it on the upswing, but tons of support there in the lower to mid $18 handle. Also, Dennis, you mentioned tough day. You got the Fed coming out later on today, not looking for a rate change, but what is their policy stance? You have unemployment on Friday.
So much information coming out.
Yeah, a lot of information that's going to move the market. So final stock is for 169. That's Citigroup. Nice move here, trading up on the pre-market, opposite of the TLT. Let's see what happens. You're not quite at your two-day high, 72.79. So I would keep an eye on that. That would take another 40-cent rally. You also sniffed the $73 area back in mid-May. So 72, 75 to 73. I still call that major resistance today.
Banks are going to be hot today.
Yep.
I mean, the TLT is annihilated. This is good news for the banks. I think your banks are going to be your leader here today. If the market closes higher, Apple's going to help, but the banks are going to help as well.
All right, that's going to do it for today's show. Thanks to everyone who listened in on YouTube and premarket.benzinga.com. Just want to remind you that all the information on today's show is for informational purposes only and not meant to be investing advice. On the docket for tomorrow, grab your harmonica because we've got Paul Harmonica on with us. He's CNN Money. He will join the show at 8:20 tomorrow, and that will be on the docket for tomorrow. So thanks to Michael Olson for joining us today. If you want to catch our podcast, you can do so on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play, or just watch the show on YouTube. Hope everyone has a good day, and I hope you join us again on Thursday.